Getting a 12% return with the index fund is nice, but getting a 66% return since September 2022 is even nicer. So I posted this video back on September 26, 2022, and the title was Why Now is the Best Time to Buy Stocks. And it was the most fearful time in the stock market when the CPI data showed an 8.3% inflation rate and the Federal Reserve raised interest rates again from 3% to 3.25% Fed funds rate at the time. This video is not about how I told you so, but more on the psychological side of investing in the stock market. People always say to buy low and sell high, but the truth is that many people choose to sell low and buy high because of fear and uncertainty. That's the reality. And you have to learn to defeat that fear and make informed decisions on long-term investing. And I want to show you this fear and greed cycle created by Olrock's Financial Group. And back in 2020 and 2021, we were in the optimism, excitement, thrill, and euphoria for those 2 years when the stock market made some tremendous returns. People were generally happy with their investments and if they had their money in the right equity investments, right? And then when 2022 hit, that was the beginning of the bear market cycle. People became anxious, in denial, right? Fear, desperation, and panic. By September 2022, people had hit the capitulation phase and started giving up on the market. And when I published that video, I got a lot of negative comments and DMs on both YouTube and Instagram that we were going to see more pain in the stock market. But take a look at this box where it says point of maximum financial opportunity. And that was in September and October of last year when the market was at a negative 20% or negative 30% return year to date in the S&P 500 and the NASDAQ 100. The research and the history of the stock market showed how people invest based on fear and greed do far worse than the average market return. So what did I do throughout the bear market? I just continue to buy and hold my investments. I bought the S&P 500 index fund every single week, and sometimes even twice a week when the market was down 2% or 3% in a single week. So as a long-term investor, I bought it here when the market was up, okay? And I bought it even more when the market was going down, even lower, okay? And this was the 2022 S&P 500 chart. From November 2021, the major index has been trending down all year, right? So just by looking at this chart, this is not only discouraging for regular investors, but it made people anxious, fearful, and even panic about their investment portfolios. People literally sold at a loss right here and right here, so even lower against the basic fundamentals. And people are buying again when the market started to climb back up. And it's interesting how people act in fear and greed in the fear and greed cycles, right? Now, take a look at the 10-year chart from Yahoo Finance. In June 2013, the S&P 500 was at 1,600 points in 2013, okay? Today, it is sitting at 4,400 points. That's an average of 12.5% average annual return for the last 10 years. So if I invested $10,000 a year from 2013 to now, I would have over $202,000 invested with over $102,000 in total interest and earnings and dividend reinvestments. How insane is that, right? This is why people who always come out on top are the ones who have a long-term outlook and not the ones who only focus on short-term fear and greed. And let me ask you this, and I want to hear you in the comment section down below. What is your biggest fear in investing right now? What is stopping you? Why do you have the majority of your retirement investments in bonds when you're still in your 20s, 30s, or 40s, making an average of 2 to 3% return, right? And when I posted this video back on September 26, 2022, I made several purchases of individual stocks and index funds. For individual stocks, I made bulks of purchases. So I didn't dollar cost average. Instead of timing the market, I had a target price to buy in bulk. For example, with let's say with Meta, when it continued to trade down below 150, 125, and $100 per share, I just bought bulks of shares of Meta to lower the cost basis. For index fund, I just simply dollar cost average my investments. It didn't matter what the prices were at the time. I just continued to buy on a weekly basis. Since September, I have made some tremendous returns because I believe in the buy low, sell high strategy. The stock market tends to make a big comeback after a big decline. So let me play you this clip from that video.
If the S&P 500 continues to stay or drop below 3,800 points, I'm going to buy heavily into the S&P 500 index fund. VOO below $370 is trading at a discount, in my personal opinion.
So instead of VOO, I decided to purchase a VFIAX index fund instead, which is the same as VOO, but that one is an ETF and VFIAX is a mutual fund. The share price was $338.60 on September 26, 2022. Today, the share price is $408.25. So it is a 20% return so far at the time I'm recording this video on June 19th, 2023. And keep in mind that the S&P 500 index fund holds the 500 largest US stocks like Meta, Tesla, Berkshire Hathaway, Apple, Google, and Amazon. And I could have just invested in this index fund, but where's the fun in that, right? And I decided to buy some individual stocks in 2022. So stay tuned. Now I'm going to show you the individual stocks I own after I show you my index fund. So my screenshot for VFIAX shows that I made a 16.08 right here percent return because I buy this investment every single week. And I buy it when it's $380 a share or $410 a share. It doesn't matter what the share price is because this is my long-term investment. So many Americans decided to sell this index fund or something equivalent because they were so fearful of what the Federal Reserve was going to do. And keep in mind that the Fed continued to raise interest rates, and right now at 5 to 5.25% Fed funds rate, and the stock market still made a recovery in the last 8 months. And the PE ratio here for the S&P 500 is still undervalued at 19 or 19.75, which is the same PE ratio back in September 2022. The PE ratio back in December 2020 was way valued at 39, and the whole year was around 36 PE. It was a lot more difficult to buy into that index fund back in 2020 and 2021, but it's been much easier to buy into the S&P 500 index fund since the bear market in 2022. But regardless of the PE ratio, I'm always going to buy the S&P 500 index fund because I'm not looking to retire for another 9 years. And I just consistently bought into the market every single week. And I just knew that it was much more expensive to buy into this S&P 500 index fund back in 2020 and 2021 than it was in 2022 and now in 2023. And before I get into the individual stocks, I encourage you to download my financial independence resources, including all of the spreadsheets I'm going to show you for absolutely free by visiting firesightchat.com/resources. You should also check out my Fireside Chat shop to check out the books and equipment I use at firesightchat.com/shopping. I know some of these research data can be extremely difficult to understand, so I encourage you to join my private Facebook group or become a member of my channel because I have a public live stream and private group session every other Wednesday to talk about all kinds of financial independence investment and early retirement strategies. You can visit firesightchat.com/pricing or firesightchat.com/coaching to schedule your financial coaching session. Let me play you the next clip from my video to go over some individual stocks that I own. And please keep in mind that this is not in any form of financial advice. Please do not buy just because I did or I still do. My channel is not about individual stocks, nor am I encouraging you or anyone in my audience to buy these stocks. I just want to show you the performances of these stocks so far in June 2023.
I also own Dropbox, and I've been using their service since 2012. This is a small cap stock, and my cost basis is around $18. So I'm not looking to buy this until the price drops below $20.
So I currently own 413 shares of Dropbox with a market value of $10,725, and it has gained over 28.74% in return, or about $2,400 in total interest and earnings. I'm using Dropbox right now for my business, and it is a cloud service that I've been using since 2012. And I'm only going to keep a small portion or a small position on this because it is a small cap stock at $9 billion in market cap. And with the PE ratio at 14, I'm looking to add a little more to the position, but it won't be that much.
And I want to buy Tesla. I really do. But I'm a little worried about the Q3 earnings in China. So I want to wait and see the Q3 earnings to decide if I'm going to add more shares to Tesla. If the stock drops to $200, then this is a buy for me.
Since I published that video, I have purchased 18 more shares, and I really wish that I had done more. Tesla is a position that I'm looking to build as big as other large cap stocks. Why do I own Tesla on top of the S&P 500 index fund? I am seeing a tremendous upside going forward. Getting a 12% return with the index fund is nice, but getting a 66% return since September 2022 is even nicer, right? It's sitting at $816 billion in market cap, and I wouldn't be surprised if it went back up to $1 trillion by the end of 2023.
Meta is a stock that I've been buying heavily recently just because of its valuation. If it continues to trade below $150, I'm going to continue to buy.
So Meta so far is the biggest winner for me with over $14,000 in market value. And I'm looking to buy more in the future. So as it's trading at $281 per share. And I actually sold some of the shares at a loss for tax loss harvesting last year. And if you don't know how tax loss harvesting works, I encourage you to check out this video linked in the description below. Anyway, the total return shows 38% return because I owned shares from 2021 and 2022 when the Meta stock was trading at an all-time high. And I would like to eventually build this position to about 10% of my portfolio. If it starts to trade higher than $350 per share, I'll most likely sell some of the shares and reallocate it to other stocks that are underperforming the market.
DocuSign is another stock that I own, and it's trading at a 3-year low right now at about $11 billion market cap. And I'm looking to buy more DocuSign if the price continues to drop below $50.
I don't know if you can actually see this, but I actually bought DocuSign with a total cost basis of $108 per share for a total of 19 shares, which is about $2,055. And I bought them in 2021 and 2022, but decided not to buy any more shares after reading the earnings report. So I decided to sell them at a loss of $52.75 per share, or a total loss of 52%, or that was a $1,000 in December 2022. And I used that $1,000 of a total loss towards tax loss harvesting to reduce my capital gains taxes for that year.
And Google, and I love this stock, Google is another stock I own, and I will continue to buy this stock if it stays between $100 and $105. And if it drops below $100, then I'm going to start buying heavily into it.
Google is the stock that I really focused on besides Tesla and Meta when the share price dropped below $95 per share. And I actually bought Google in two separate accounts with a total of $49,000 in market value. And it's gained an average of 14% in total returns since September 2022, and it slightly beats the S&P 500 index fund. And I'm still bullish about YouTube TV because of the contract they signed with the NFL to become the exclusive provider for the NFL Sunday Ticket. And I'll make an update on this stock later on in Q3 and Q4 of 2023 to see where the share price takes us.
Amazon is a stock that I haven't been able to buy because of its valuation. If it drops below $110, then I would consider buying. But I'll probably wait until the Q3 earnings report. And Apple is another stock I'm keeping an eye on, and I don't own any Apple right now. If its market cap drops below $2 trillion, then I would consider owning Apple. And Netflix is another stock that I'm keeping an eye on too, because the valuation has finally come down to about 22 or 23 forward PE. And this is the cheapest valuation I've seen in so many years. So if this stock drops to about $200 or below, then I would consider buying it.
So I decided not to buy any Amazon stock for one reason, and that would be Rivian. And I just don't see how Rivian can be profitable in the short term. Maybe in the long term, but not anytime soon. So I am actually okay with just sticking to investing in the index fund instead of buying Amazon's individual stock. Did I miss out on a 46% return? Sure, but I focused on buying Meta, Tesla, and Google stocks instead. And for Apple, to me, has been overvalued for quite some time. And right now it is trading at 31 PE, which is the 31 times the earnings, which is more than what it was at 22 or 23 in 2022. And Netflix has been quite a story with the password crackdown, but they've still managed to gain subscribers over time. And with a PE ratio of 46, Netflix to me is still slightly overvalued. If the price comes back down to $350 or maybe $300 a share, then I would consider buying it. But anyway, let me know in the comment section down below if you enjoyed this type of content. And if you want to know more about how I invest and save my money to achieve financial independence to retire early, be sure to check out these two videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.